So you've probably seen the news, huh? Big changes happening in global trade.
Yeah, the U.S. is really shaking things up with these new tariffs. It's a lot to unpack.
Yeah, I mean, everyone's talking about it, these tariffs.
And for good reason.
That's what we're diving into today.
A deep dive into these tariffs, these reciprocal tariffs, I think they're calling them.
We're going to break it all down for you.
Based on the latest from CNBC and the USTR, we're going to try to make sense of it all.
Because it's a big deal, and it's going to affect everybody, right?
Definitely.
The global economy, specific industries, even, just like your daily life.
And your wallet.
Yeah, exactly.
So we're going to figure out what these tariffs actually mean for you.
Okay, so first things first. What are these reciprocal tariffs all about?
So the way it works is they're basically setting a base tariff of 10%.
Okay.
On almost everything coming into the U.S., like from almost every country.
But then it goes up from there, right?
Yeah.
I've seen some pretty high numbers.
Oh, yeah, it can get a lot higher.
Depending on where it's coming from, of course.
Right. Like China's at 34%, the EU's at 20%, Vietnam's hit with a 46% tariff, Taiwan's at 32%.
Wow. I mean, I got to ask, how are they deciding these numbers? Because a lot of folks, even economists, are saying, it doesn't seem to make a whole lot of sense.
Yeah, the methodology is a little murky. It's not totally clear how they landed on these exact numbers.
Yeah.
And, even our trading partners are scratching their heads a bit.
It's definitely a bit of a mystery right now.
Mm-hmm.
But here's the thing. Trump has said he's open to, making deals. But then his people are like, no, these tariffs, they're not about negotiating. So what's the real story here?
Right. Is this a bargaining tactic or something else? I think that's what everyone's trying to figure out.
Yeah, that's the million-dollar question. Okay, so let's talk about the market reaction, because things got a little crazy after this announcement.
Oh, yeah. The markets definitely did not like this news.
Not one bit.
No. European stocks took a big hit, closed down 2.7% the day after the tariffs dropped.
Oof, yeah. And it wasn't just over there. Some of our biggest companies here felt the heat too. Apple, Nike, they were both down big time.
Yeah. And the S&P 500 had its worst day since 2020. That's a pretty big red flag.
Absolutely. But it's not just the stock market, right?
Yeah.
This is having a real world impact on businesses.
Yeah, we're already seeing some companies make some drastic changes. Like Infinity.
What'd they do?
They're stopping production.
Really?
Indefinitely. On two of their crossover models that they make in Mexico.
Why?
Because of the tariffs.
Makes sense. They're for the U.S. market, right?
Yeah, exactly. And with that 25% tariff on imported cars, it's just, it's not worth it for them to keep making them there.
So they're just putting the brakes on.
Pretty much.
And Stellantis is doing something similar.
Yeah, they're pausing some production in Canada and Mexico.
So it's like a domino effect.
Yeah, the auto industry is really, really feeling this. But then you have companies like GM, they're actually doing the opposite.
Right.
They're planning to increase their truck production.
Huh. Interesting.
But it's temporary, just to, adjust to all this and maybe try to get ahead of any problems with supply chains.
Smart.
Yeah. If imported trucks get more expensive because of the tariffs, people might start buying more American-made trucks.
Right. So it's kind of a mixed bag. Some companies are struggling. Others are trying to see it as an opportunity.
Exactly. It's too early to tell who's going to come out on top,
Yeah, totally. Okay. What about other sectors? We saw Boeing and the whole aerospace industry take a hit. Why is that?
Well, aerospace is a very global business. Parts are coming from all over the world. Even Airbus, they build a lot of their planes here, but they still rely on suppliers from other countries.
Makes sense.
So with these tariffs, it's just a lot of uncertainty for them.
Uncertainty about what?
About costs, how much those imported parts are going to cost now. And then there's the risk of other countries retaliating with tariffs on our exports.
Oof. Yeah, that would be bad.
And even just raw materials.
Right.
If those get hit with tariffs, it's going to push up the costs for everybody.
True. Okay, so manufacturing is getting hit, but it doesn't stop there, does it? What about retail?
Yeah, retail's getting squeezed too.
Makes sense. They have to buy all this stuff, right?
Exactly. So companies like Target, Nike, Deckers, They all hit 52-week lows. They're worried about, those higher import costs.
Yeah, because they're going to have to either eat the cost or pass it on to us, the consumers.
Right. Either way, it's not good for them.
And we saw it, like a lot of the small cap stocks, they really took a beating.
Yeah, small caps are actually in bear market territory now.
Which means what exactly?
Basically, it means investors are spooked. They're worried about the economy, not feeling very confident.
Right.
And, that tends to hurt the smaller companies more than the big guys.
Okay. Now, there was one interesting thing with restaurants. It seems like the fast food places are actually doing okay.
Yeah, fast food is actually up a bit.
Why is that?
I guess the thinking is if everything else gets more expensive because of tariffs, people might start cutting back on fancy dinners and eating more fast food.
Because it's cheaper.
Right.
Makes sense, I guess.
It's kind of like trading down, to save money.
Okay, so fast food's doing good. What about healthcare? I saw GE Healthcare, their stock was down.
Yeah, healthcare is a bit tricky with this whole tariff thing.
Why is that?
Well, a lot of those companies like GE Healthcare, they do business all over the world.
Right.
So if they're importing parts for their equipment, those tariffs are going to make things more expensive.
Yeah.
And if other countries retaliate with tariffs on our healthcare exports, that's going to hurt them too.
Right. Okay, and lastly, what about tech? I know semiconductors weren't directly targeted by these tariffs, but we still saw those chip maker stocks drop. What's going on there?
Yeah, I think the concern with chip makers is, even though their chips aren't directly hit, they go into so many other products.
Like what?
Like computers, phones, electronics, all that stuff that is subject to these new tariffs.
Ah, I see.
So if those things get more expensive and people buy less of them, that's going to hurt demand for chips too.
That makes sense.
Plus, there's just this general worry that, these tariffs could really slow down the whole economy. And that's not good for anybody, especially tech.
Right. So basically, it's a ripple effect. It's like one big interconnected web.
Exactly.
Okay, so we've talked about the markets, but now let's get into the stuff we actually buy. How are these tariffs going to affect our wallets?
Yeah, let's talk about how this is going to hit our shopping carts.
Exactly. I mean, we saw Swiss watches and cognac. Those are getting slapped with some pretty big tariffs.
Yeah, those are definitely getting hit hard.
Like how much?
A 20% tariff on stuff from the EU and a whopping 31% tariff on Swiss goods.
Ouch.
Yeah. JP Morgan analysts are saying companies like Swatch Group, Richemont, Kering, Burberry, and LVMH are going to feel it.
So if you're thinking about splurging on a fancy watch or some high-end cognac,
might want to rethink that, or at least budget for a bigger price tag.
Yeah, I think I'll stick with my my Timex for now.
Probably a good idea.
Okay, but it's not just fancy stuff, right? What about everyday things? Will those get more expensive too?
Unfortunately, yeah.
Like what?
The Consumer Brands Association, they're saying even basic things like coffee, bananas, toilet paper, all that could see price hikes.
No way. Not my toilet paper.
I know, right?
But seriously, how does that even work?
Well, it's a couple of things. It could be that the tariffs directly hit those imported goods, making them more expensive to bring in.
Right.
Or it could be the raw materials. Like to make toilet paper, you need wood pulp, right?
Yeah.
If those get hit with tariffs, it's going to push up the cost of production, and then those costs get passed down to us.
Man, so even my morning coffee and my bathroom breaks are going to get more expensive.
It's looking that way.
What a world. Okay, what about alcohol? We already mentioned cognac, but what about other drinks?
Well, pretty much everything is getting hit. Like wines, spirits, beer from the EU, that's all getting a 20% tariff. And canned beer from Mexico.
How much?
25%.
Oof.
Yeah, so your next beer run might cost you a bit more. Except for tequila and Canadian whiskey, those are safe for now. They held off on those tariffs.
Interesting. So I guess I'll be drinking margaritas and whiskey sours for a while.
Sounds like a plan.
Okay, let's talk about shoes. Because everybody needs shoes.
And almost all the shoes we buy are imported.
Exactly. So what's going to happen there?
Well, unfortunately, price increases are pretty much inevitable.
Yeah.
Especially since major shoe producers like Vietnam and China are facing these huge tariffs.
Right.
And there's another worry, too. To keep prices down, companies might start using cheaper materials.
Oh, no. Nobody wants that.
No, but it's a real possibility. So you might end up paying the same price for shoes that aren't as good quality.
So it's kind of a lose-lose situation.
Yeah, pretty much.
Okay, what about vacations? Will those get more expensive?
Possibly. They're saying hotel construction might be affected.
Really? How so?
Building materials.
Right.
A lot of them come from China and Vietnam, those countries with the high tariffs. So it's going to make those materials more expensive, which means building hotels is going to cost more.
So it's going to get passed on to the travelers, I guess.
Yeah, likely. And it could even slow down new hotel projects or delay construction.
Man, this is really getting into everything, isn't it?
Pretty much. These tariffs have a long reach.
Okay, so we've seen the market freak out. We've talked about prices going up. But now let's talk about the bigger picture. Like, is this good for the economy? What are the experts saying?
Yeah, let's get into the nitty-gritty of the economics.
Because it's one thing to talk about the price of coffee, but it's a whole other thing if this, like, tanks the economy, right?
Right.
And I saw a number, it was almost $1 trillion.
Yeah, they're saying these tariffs could end up impacting the U.S. economy and global supply chains by almost $1 trillion.
$1 trillion. I can't even, like, wrap my head around that number.
Yeah, it's a lot of money.
That's an understatement.
It is.
So are these tariffs going to work?
Mm-hmm.
Like, is this going to force other countries to make better deals with us?
Honestly, a lot of trade experts are pretty skeptical.
I don't think so.
They're saying it's not that simple. International trade is, it's really complex. There are so many different countries involved with their own interests and their own policies. Yeah. So getting everyone on board with quick negotiations and lasting agreements, it's a tall order.
Yeah, I can see that. And then there's that scary word.
Stagflation.
Yeah. Like, what even is stagflation? Why are people so worried about it?
It's basically a nightmare scenario for the economy. It's when you have slow growth, like the economy is barely moving, but at the same time, prices are going through the roof.
That's bad.
Really bad. And that's what some experts are worried these tariffs could trigger.
How?
Well, like we've been talking about, tariffs make imports more expensive, right? So that can push prices up.
Right.
But at the same time, those tariffs can also hurt economic growth because they disrupt trade and make it harder for businesses to operate.
I see.
So you're basically stuck between a rock and a hard place.
Not a good place to be. And that puts the Fed in a tough spot too, right?
Exactly.
Because what can they even do about it?
It's a real dilemma for them. If they try to fight inflation by raising interest rates, that could slow down the economy even more. But if they try to stimulate growth by lowering rates, that could make inflation even worse.
So they're kind of damned if they do, damned if they don't.
Pretty much. It's like a policy box, as they call it. Not a fun place to be.
Not at all. Okay, so we've heard from the economists. What about the people actually running businesses? What are they saying about all this?
Well, they're not too happy about it.
Makes sense.
Like Maersk, the big shipping company, they said straight up, these tariffs are not good news for the global economy.
Pretty blunt.
Yeah, and they're not alone.
Who else?
Brad Gerstner, the CEO of Altimeter Capital, he's calling this tariff plan a huge mistake.
Wow.
And he's saying he's heard the same thing from a lot of other CEOs.
So the business world is not on board?
Not really. They're worried about the long-term consequences, not just for the U.S., but for the whole world.
Right.
And then you have folks like Reid Hoffman, the tech investor.
What's he saying?
He's even more critical. He thinks this whole thing is actually designed to hurt everyday Americans. Yeah, he thinks it's more about political power than about, fair trade.
Wow. That's pretty harsh.
It is.
So is everyone just doom and gloom? No one sees anything good about this?
Well, not everyone.
Okay.
Like Steven Mnuchin, he was Trump's Treasury Secretary, remember? He's a little more optimistic.
What's he saying?
He thinks these tariffs are just a starting point, like a way to get everyone to the negotiating table. He's hoping they'll eventually be negotiated down to something more reasonable.
So he's hoping for the best.
Yeah.
What about J.D. Vance? He's pretty vocal about this stuff.
Oh, yeah, he's all in on these tariffs.
What's his take?
He's saying that in the long run, these tariffs, along with all the other policies they're putting in place, they're actually going to lead to lower prices for everyone.
Really?
Yeah, that's his argument. But he's also saying it's not going to happen overnight.
Right. So we got to be patient.
That's what he's saying.
Okay, so there's a whole spectrum of opinions out there. But can we go back to how these tariffs are actually calculated? Because that whole thing is still kind of confusing to me.
Yeah, it was a bit of a mystery at first.
I remember seeing some stuff online. People were joking that like a chatbot could have come up with these numbers.
Right. Like just plugging some numbers into a basic formula.
Exactly. Like they're not even taking into account all the other things that affect trade.
Yeah, economists were freaking out a little bit because it's just not that simple.
Right.
Like you can't just say, oh, this country has a trade deficit, so we're going to hit them with this tariff.
Exactly. There's got to be more to it than that.
There is, or at least there should be.
So what's the real story?
Well, the USTR, they finally came out and explained their methodology.
Okay.
And basically what they're saying is these reciprocal tariffs, they're designed to, to completely eliminate bilateral trade deficits.
Whoa, eliminate them entirely.
That's the goal, yeah. They're assuming that those deficits are happening because of unfair trade practices, like tariffs and other barriers that other countries put in place.
So their logic is we need to level the playing field.
Right.
By hitting them with tariffs of our own.
Exactly. They're saying that, these deficits haven't gone away on their own, so they need to step in and fix it.
With tariffs?
With tariffs.
Okay.
They actually laid out the formula they used and all the different parameters.
Interesting.
So basically, they're taking all the import and export data from 2024, and they're plugging it into this formula to figure out what tariff rate will bring the trade deficit down to zero.
And what did they come up with?
Well, the calculated rates are all over the place, anywhere from 0% to 99%.
Wow, that's a big range.
Yeah. But the average, if you just look at the raw numbers, is about 20%. But if you weight those rates based on the actual value of imports, it jumps up to 41%.
So a lot higher.
Yeah. And then for any countries where we actually have a trade surplus, they're still hitting them with a 10% tariff.
So no one's getting off easy.
Nope.
Okay, well, let's move on to the politics of this whole thing, because clearly it's not just about numbers and economics.
Oh, yeah. This is a political minefield.
Big time. And there's a lot back and forth, like even within the administration.
Yeah, mixed messages all over the place. You have Peter Navarro saying, these tariffs, not a negotiation. This is a national emergency.
Strong words.
Very strong. But then Trump himself comes out and says he's open to talking as long as other countries bring something phenomenal to the table.
So which is it? Are we negotiating or not?
Who knows? That's the problem. It's all very unclear.
Yeah, it's got to be frustrating for other countries.
Definitely. They don't know what to expect.
Right. And then you have Howard Lutnick, the Commerce Secretary. He's doubling down on the not a negotiation thing, saying Trump's not backing down, no exemptions. It's all about fairness.
Yeah, he's taking a hard line.
But then Eric Trump says the first countries to make a deal with his dad will win.
So is it a negotiation or not? I'm so confused.
Right. It's like they're sending mixed signals on purpose.
Maybe that's the strategy.
Maybe. Okay, so what about the rest of the world? How are other countries actually reacting to this?
Well, some are already taking action. Like Canada, they're hitting back with a 25% tariff on U.S. cars that don't meet the USMCA rules.
Ricartat.
Exactly. They're saying they need to protect their auto industry, and they're even trying to encourage car companies to keep production in Canada by offering them ways to avoid those tariffs.
Smart.
Yeah. And then there's France. Macron is urging French companies to stop investing in the U.S.
Whoa, that's a big deal.
Yeah, he's basically saying these tariffs are a major attack on the global trade system.
Yikes. And it's not just big countries either.
Right.
Even Australia's getting in on the action.
Yeah, their prime minister, Albanese, he pointed out that these tariffs even apply to, tiny Australian islands.
Really?
Yeah, places like Heard and McDonald Islands and Norfolk Island. He's basically saying, come on, these places aren't exactly major trade threats.
It just shows how broad these tariffs are, I guess.
Yeah.
But, it wouldn't be a story about Trump without some unconventional theories, right?
Right, and what's the angle here?
Exactly. And I saw Bill Ackman, the investor, he's got this idea that Trump's whole strategy is to act a little crazy.
The madman theory, basically.
Yeah.
If you're unpredictable, people are more likely to give you what you want because they're scared of what you might do next.
Interesting. I mean, it wouldn't be the first time, right?
Right.
Okay, and then there's some pushback even within the U.S. government.
Yeah, there's a bill in the Senate that would basically limit Trump's power to impose tariffs.
Really?
Yeah, they want to require congressional approval for any tariffs that last longer than 60 days.
So Congress wants more control.
They're saying, hey, this is a big deal. We need to be involved.
Makes sense. So we've covered governments, we've covered businesses. What about us, the regular folks?
The little guys.
Yeah, what are we supposed to do? How are we supposed to navigate this whole mess?
Well, the FTC chair, he's warning companies not to take advantage of this situation.
What does he mean?
He's saying they can't use these tariffs as an excuse to jack up prices even more than they need to.
Like price fixing.
Exactly.
Okay, so we got to watch out for that.
Yeah.
But I also saw, like, even among similar stores, they're not all reacting the same way. Like Dollar Tree and Dollar General, they both sell cheap stuff, but Dollar Tree's stock got hit way harder. Why is that?
It all comes down to where they get their stuff.
Ah, okay.
Dollar Tree gets a lot of their goods from China and Vietnam.
Which are the countries with those big tariffs.
Exactly.
Makes sense. So they're feeling the pinch a lot more than Dollar General, who doesn't rely on those countries as much.
Interesting.
And now Dollar Tree is even thinking about raising prices.
So even the dollar store isn't safe.
It seems that way.
Okay, what about cars? Any advice for folks who are thinking about buying a car right now?
Well, Ford is trying to sweeten the deal.
What are they doing? They're offering employee pricing to everyone.
Really? That's a pretty good deal, right?
Yeah, it could be a good time to buy a Ford if you're in the market.
Okay, good to know.
Mm.
What about other industries? We saw Pandora, the jewelry company. They're taking a big hit from these tariffs, right?
Yeah, they're expecting a pretty big financial blow.
Why is that?
Most of their jewelry is made in Thailand.
Ah, and Thailand has a tariff.
Yep, a big one. So they're trying to figure out what to do.
What are their options?
They could raise prices, or they could try to change their supply chain, maybe move production somewhere else.
Tough choices.
Yeah.
Okay, and lastly, we talked about fast food doing well. Is that something investors should be paying attention to?
It's definitely interesting.
Is it a safe bet?
Well, no investment is ever a safe bet, but the logic makes sense.
Right.
If people are tightening their belts, they're going to eat out less.
Makes sense.
But they're still going to want to eat.
And fast food is cheap.
Exactly. So yeah, investors are seeing those fast food stocks as a potential bright spot in all this mess.
Interesting. Okay, well, we've covered a lot of ground today. What a roller coaster.
It's definitely a lot to take in.
Yeah, and it seems like we're just at the beginning of this whole thing.
Right. This is just the first chapter.
Who knows what's going to happen next?
Yeah.
So for you, our listeners, we'll leave you with this. What do you think is going to happen? Will these tariffs actually lead to better trade deals? Or are we headed for a full-blown trade war? Or maybe something else entirely, something we haven't even thought of yet.
Yeah, and think about how all of this could affect you personally.
Exactly.
From the price of your groceries to your investments, this has the potential to touch every aspect of our lives.
So stay informed, pay attention to what's happening, and maybe stock up on some toilet paper while you're at it.
Couldn't hurt.
Thanks for joining us for another deep dive.
See you next time.
And don't forget to subscribe so you don't miss an episode.
And leave us a rating.
We love hearing from you. Until next time, stay informed.
And stay curious.
Bye for now.